In this video, we'll be going over IRS Form 1139, Corporation Application for a Tentative Refund. So this is not a very common tax return. However, it has been requested by at least one viewer, and I apologize for the delay in getting this out. This person actually requested it several months back, and I put it in my schedule. I just wasn't able to get to it until right now. With that said, the vast majority of taxpayers won't see this form. The vast majority of corporate taxpayers will probably hire an accountant to prepare this tax form. So for those of you who are paying attention, we can walk through this, but if you are looking for that little tiny piece of advice or that one nugget of information, you can check out our article. Simply go to teachmepersonalfinance.com, type in IRS Form 1139, and you'll see the article up here. We'll also put a link in the show notes for you. So this is one page. We're going to talk before we get into the details of this tax form. We're going to talk about a little bit about why you would use it. So in a corporate setting, sometimes there are business credits, operating losses, capital losses that may be carried back to a prior tax year. So, for example, if you're filing your, in this case, 2023 tax return, and you have a net operating loss or a net capital loss that you can carry back, you would use this form with an understanding that you're going to reduce your taxable income in a prior year, and that you would like the IRS to recognize that you're going to receive that tentative refund, and this is the form that you would file in advance. So basically, the comparison would be for individual taxpayers. IRS Form 1045, which is a very similar tentative refund application where you know you're going to get a credit as soon as you file that tax return. Maybe the rest of the tax return isn't quite ready, or you're still gathering information, but you want to go ahead and get that tentative refund because you know that this is going to be, this is going to apply. So what we're going to do here is go through this tax form. Then we're going to talk about the conditions in which you would be filing it, other considerations, how you would file it, and so on and so forth. So let's go ahead and start at the top. We've got our corporate entity, Doe Enterprises, operated by our CEO, John Doe. The employer identification number, the address, date of incorporation, and contact information at the top. So if you have recently changed your address, you should probably file IRS Form 8822-B to notify the IRS. We'll go ahead. Anytime there's a form that we mention here, if we've created resources for it, we'll put a link in the show notes to both the article and the video as applicable. So now we're going to get into some of the filing background. So this isn't formally delineated by the IRS, but I break this into two parts. Basically, lines 1 through 10 are kind of the background information, and then the rest of the form is focusing on computing that decrease in tax and how that works. So in line 1, we're going to enter the reason or reasons for filing. You can have a net operating loss. However, starting with 2021 and onward, you can only carry back losses from farming activities, or if you're an insurance company that is not a life insurance company. So you can carry back losses up to 2 years under those conditions. So in this case, I just wrote $10,000 net operating loss carry back. Generally speaking, you would just have to carry that forward. So let's just say that there's unused general business credit, we're going to reduce this to $5,000 because that's what we are going to use in the computation. Net capital loss can be carried back up to 3 years, and it's treated as a short-term capital loss in the carryback year. So if this were for the 2023 tax year and you had a capital loss, you could go back to 2022, 2021, or 2020. An unused general business credit. So if the corporation's claiming a tentative refund based on the carryback of an unused general business credit, then you would attach the appropriate credit form. So it could be IRS form 3800, or if there's another business credit that's applicable, you would make sure that you attach that to this form 1139. Under the other, which is line 1D, if applicable, you could also claim a tentative refund based on a tax overpayment due to a claim of right adjustment under Internal Revenue Code section 1341. So those are up to 4 different reasons. You can put in any or all that apply. In this case, we're going to use the unused general business credit. We're going to put in $5,000. So let's just say that we were in the middle of our computing our 2023 tax return that actually was filed in April 2024 at the IRS Service Center in Austin, Texas. So if this application is for an unused credit that was created by another carryback, then you would enter the ending date for that particular tax year of that first carryback. In line 4, did the loss result in the release of a foreign tax credit, or is the corporation carrying back a general business credit that was released because of the release of a foreign tax credit? So if yes, then you would have to file an amended return to carry back those released credits. In this case, we're going to say no to simplify this for illustrative purposes. Was there a consolidated return filed for any carryback year? Again, no. But if yes, then you would enter the tax year in line 5B. You would also enter the common parent's name and employer ID number if it's different from what's outlined up here in the taxpayer information. In line 6, we're talking about extensions. So did we request an extension of time? We'll put a link in the show notes to the IRS form that you would file to get an extension for a corporate entity. So if yes, then you would enter the date to which it was granted, and then you would enter the date that your IRS form 1138 was filed. So we're going to say no. And then the unpaid tax, so that's the tax form 1138. So if there's unpaid tax for which that tax form is in effect, you would put that here. Let's just say $5,000. I'm going to go ahead and back that out since that's not applicable. I was just using that to illustrate that. If this is an application for a dissolved corporation, you would enter the date of dissolution. In line 9, you would answer yes or no as to whether or not the corporation has filed a petition in tax court for the year or the tax years to which you carry back or you plan to carry back. And then, is there any part of this that's attributable to a reportable transaction? If yes, then you would have to attach IRS Form 8886, which discloses that reportable transaction. And so that's part of the supporting documentation. Going through lines 1 through 10 will help you identify which supporting documentation you'll need to complete when you, or you'll need to attach to this when you send this off. So lines 11 through 29 illustrate the computation of a decrease in tax. You can use this for up to 3 tax years. For simplicity's sake, we're going to focus on this one. This is based on an example that is in our article. So if the tax year was 2023 and the first preceding tax year would be 2022. The second preceding tax year would be the one that ended 2021. So if it makes you feel more comfortable, we'll go ahead and do this. So we're simply carrying this back, this general business credit back to the 2022 tax year. So, and now we're going to go through for each year that's applicable. You'll have one column that's before carryback, and then one column that's after carryback. And for each year, so columns A, C, and E are all before carryback. Columns B, D, and F are all after carryback. And so if we were to have a second one, this is actually reverse order. You would put the the immediate preceding year right here. So that's how that should look. So in this case, in this situation, let's say that our previous year tax return had $100,000 of taxable income. For line 11, we actually put the same figure in the column A and column B. That's going to be the last time we do that. And then let's just say that this was a capital loss carryback. I know I called it a general business credit. There we go. Now we're all even. So we're going to see how this capital loss carryback impacts the rest of our tax return. So basically, we subtract those two. We get $95,000. An NOL deduction, again, you can't take this unless you're into farming or insurance after tax years 2000 ending in 2020. But if you're going back prior to that, then sure you can, I guess. I don't think that you can do this realistically. So we put 0 here just to avoid any confusion on NOL. We're only going to focus on this capital loss carryback. Taxable income basically would be subtracting line 14 from line 13. We get $95,000. So we calculated each of these based on the corporate income tax rate of 21%. In column A, our tax was $21,000. In column B, that becomes $19,950. Line 17 generally doesn't apply since corporations are no longer subject to alternative minimum tax or AMT. But if you're going back to 2017 or prior, then you would attach IRS form 4626, which is the corporate AMT tax form to this. So in this case, we have 0. Base erosion minimum tax is line 18. If it applies, we would attach IRS form 8991. So I'll take a pause here to discuss base erosion minimum tax. This is a tax that applies to corporations that have average annual gross receipts exceeding $500 million for the preceding 3 tax years, and deductions that were paid or accrued to foreign related parties in excess of 3% of their total deductions, or in the case of certain banks and registered securities dealers, 2%. So this does not apply to regulated investment companies, acronym RICs. It doesn't apply to real estate investment trusts, also known as REITs, and it does not apply to S corporations. That doesn't apply in this case, but if it were, we would attach IRS form 8991 and then enter the base erosion minimum tax. So we'll add all of these lines, which basically mean that we're carrying these down. The general business credit. So I put in this, again, it's not the exact same as up here, although I could, I guess. So there we go. General business credit of $2,000. Let's just imagine that there's some other applicable tax credit that, that would apply in that tax year. We'll call it $1,000. There's no specific examples in the form instructions or anything like that. So we total lines 20 and 21. We arrive at $3,000. That's the total credits, which we're going to subtract from our total tax liability, and we get these numbers here on line 23. So personal holding company tax, if it's applicable, you would see that on Schedule PH of your Form 1120. In this case, that doesn't apply. We put zeros in here. If there were any other taxes that might apply, then you would enter them in line 25. So let's just say that we had $1,000 of other applicable taxes. We would add that back in line 26 so that we arrive at our total tax liability. In column A, this is the before carryback tax liability. In column B, this is the after carryback tax liability. And now we're going to carry this number, the $17,950, down here. We're going to subtract the difference, and that is our decrease in tax. That basically is telling the IRS, hey, we got $1,050 coming, so please give us our money. Line 29 may apply if you're requesting a tentative refund based on the claim of right adjustment under Section 1341B1. That was covered up here in Section 2, or actually specifically in line 1D. So since we don't have anything there, we don't have anything to apply. And then John Doe would sign and date the form. His paid tax return preparer, if applicable, would also sign, date the form, enter his firm's address and information. PTIN is the preparer's tax ID number. The accounting firm's employer ID number. He would check it if it's self-employed, so on and so forth. So a couple of filing considerations. Specifically, when do you file IRS Form 1139? Generally, a corporation must file it within 12 months of the year in which your loss, your NOL, your capital loss, your unused credit, or your claim of right adjustment came up. So within 12 months. And then the corporation also has to file its tax return no later than the date that it files IRS Form 1139. However, you would send IRS Form 1139 with the supporting documentation to the IRS Service Center where the corporation files its tax returns, but you would not send it with the tax return. The IRS instructions specifically state do not submit this form with your tax return. So you should attach the first 2 pages of your corporate tax return, any applicable forms and schedules, such as Schedule D, IRS Form 3800, etc. All copies of IRS Form 8886, that's the reportable transaction disclosure document. Any applicable election statements, if you have to submit a separate statement about elections that you've made. Any forms or schedules for all carryback years for which you recalculated. So if you have multiple years here, you would have to attach the forms for each of those years. And then IRS Form 8302, which is an electronic deposit of tax refund of $1 million or more. So electronic deposits are only available for a carryback year in which the refund is at least $1 million. So we fell well under that, of course. Obviously, this is a hypothetical example, but you could just imagine this being very similar if you added 3 zeros to every one of these numbers here. So that's all we have for this form. Again, this is not going to be a very commonly discussed tax form, But for those people that are looking for that piece of information, if you don't glean that from this video, do take a look at our article where we try to cover all the bases, you know, in a little bit more detail, but in a more user-friendly manner than the 20 pages of instructions on the IRS website. So we'll put links in the show notes to all the forms where we've created resources. So if you need additional information, you can always watch a video or read the article. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's another topic that you'd like to see covered in an upcoming video, please hit me up in the show note in the comments section. Thank you very much and have a great day.